everyone, this is Abhijit Chatterjee recording a weekly session of Chartsarefun. This is for the week of December 15th, recording this in the afternoon of December 22nd. Well, 2 weeks to the end of the year, there is a lot of expectation of the market for a Santa Claus rally. Last Friday, in particular, there was the Bank of Japan rate hike. Market was expecting a significant sell-off from the yen carry trade. Didn't quite get it. If any, the cryptos rallied. For whatever reason, market liked the fact that Bank of Japan was a bit dovish in their stance. They're going to be a bit more cautious with additional rate hikes, and that turned out to be, worked out well for the market. So we'll see what some of the technical indicators are telling us. We'll look at charts of QQQ, NVDA, which is kind of the poster child of the Nasdaq 100's rally. And then the biggest gainer this year has been silver, SLV in particular, the ETF for that. We'll look at that chart, and then cryptos, Bitcoin in particular. So without further ado, this is our website, chartsarefun.substack.com. We send out our blogs in the morning. Appreciate you subscribing to it. You'll get it in an email around 7 when the blogs come out. Our YouTube site or channel is also Charts Are Fun. We appreciate you subscribing to the channel. And then if you like the videos, if you could hit the like button, we really appreciate that. So we can talk about some of the technical indicators where we think are some signs of complacency setting up. Start off with wicks. We can see that wicks has pulled back quite a bit since that November climb when it hit closer towards the 28 level, which it tested twice in the last 3 months, sometimes towards the third week of October, and then again a repeat test of that 28, 27, slightly lower high at 27.84 in third week of November. And from there it's pulled back, and it's pulled back now testing a key level from what we saw at September at 14.33. That's the level we tested today as well at 14.33. And we can see that RSI on the VIX, is not coming down like all the way towards the 30 level. It's been hovering around at that same level, and same thing with the MACD, indicating that potentially maybe there is a volatility climb coming. So we got to be careful of that. We cannot rule out complacency hitting the market and VIX scraping the lows of the year somewhere, as I said, at 14.33 in September. It was even lower levels at 14.12 in late August. So we'll see how far VIX goes in the next few weeks. And the other thing is the CBOE put call ratio in terms of the options market. If you look at the puts and the calls that are being purchased on a daily basis, that put call ratio in particular, higher the put call ratio, it means fear in the market. It means when market sells off is when the put call ratio climbs, and then lower put call ratio means complacency, means there are more calls and puts being bought, and as a result that ratio comes lower. That's printing a pattern of lower highs, higher lows and lower highs. So higher highs and higher lows. So we can see that right here, a pattern of higher lows 0.7, 0.75 to 0.79, and then higher highs from 0.95 to 0.99. So the pattern of higher highs, higher lows is an indication that potentially maybe we could get a CPC spike like we saw back in April, and that also led with a pattern of higher highs and higher lows, as we can see a trending channel till the point when then it shot up towards early April. So we could be setting up for something similar like that. And the other indicator of extreme bullishness is among the active investment managers, NAAIM. That exposure index is now above 100 from what we saw again towards late October, and before that in the 99 level in the early July timeframe, and so on. So that pattern of 100 at that exposure indicates that the active money managers are almost fully invested. So they're very bullish on the market as well, expecting maybe that Santa Claus rally. But then if you look at QQQ's daily chart, this is in many ways, the bulls would call it an inverse head and shoulder. We can see the left shoulder pull back to 597, back to the neckline around 624, pull back to the head at 579, 580, up to 628, the neckline. So slightly higher neckline than the previous level of 624. And then right now, higher low at 599 above the 597, which is the left shoulder. So right shoulder slightly higher than the left shoulder. And that measured target from 579 to 628, you're talking about roughly 40, like if you take 49 points to 579, you get a 628. So 628 plus 49 points, you're talking about closer towards 678 or so is where we think the target on this inverse head and shoulder is. So today it's at plus 3 points at 0.5% so far in the afternoon on the 22nd. So we shall see if this breakout comes this week with the Santa Claus rally. Typically comes a couple of days before Christmas and goes on till the end of the year. So we'll see if that pattern continues and we see upside. In that case, of course, to move up from where we are now at 619, go to all the way to 678, you're talking about 60 points or so. That's a little less than 10% rally for it to get there. So we'll see if we can get that. That's a pretty big move. And for that, a key stock that has to help move that is NVDA. And that's formed what we call as a bullish falling wedge pattern. So if you join the lower highs and the lower lows, they are kind of converging down to a wedge, and it just broke above that bullish wedge pattern today. And we can see that it's up 1.36% today. NVIDIA is rallying with anticipation of sales from China to be coming in with President Trump's announcement of, the H200 chips can now be sold into China. It's not the Blackwells, but at least the hopeful chips are now available to be sold in China, the high end of those. And there is a payback that the NVIDIA is to make for every percentage of the sales that the government will get. But that said, maybe expectations of China sales coming in helping the NVIDIA's revenues to continue climbing, and this kind of breakout above the bullish rising wedges to be noticed. Of course, there is key resistance now at that 50-day moving average at 185. It's at highs today was 184.16, 185.65 is the 50-day moving average. We'll see if it's able to take that out. Until then, it's kind of bullish for NVIDIA to break out of this falling wedge pattern. And then we're going to talk about, as we said, one of the biggest movers this year has been silver, SLV. This is a bearish rising wedge. While you have a bullish falling wedge in NVIDIA and a break above that, this is a bearish rising wedge, and it's at the peak, and the apex is almost converging to a point where now we can see RSI at a lower high than the RSI when it had hit 49. So that's a classic negative divergence. That breakdown could bring it all the way back towards a test of 49. That from where it broke out is the 50-day moving average. We'll see if this is extremely overbought, which is silver is now chased by every retail investor. We'll see what happens coming out of this bearish rising wedge. So that is what we're going to watch in silver. Now, cryptos, Bitcoin in particular, it tested a very key trend line. If you join the peaks of 2021, 64.9, 69,000, then to 73.8 in early 2024, it tested once in the April sell-off, quickly rebounded, made a higher high, and from there it has fallen and just rebounded off that, leaving a long wick. Whenever, as we show in the circles, long wicks then lead to reversals higher. So we see a wick in April slow, a wick down here, a wick in the 2024 low that we saw. That was around the 24 August timeframe, and then a reversal higher. So that's potentially a possibility that we could even take out higher highs. Now we can see that RSI is printing lower highs. So we'll see how far this goes. But this, it breaks out 126, could make an attempt towards that 132 or so target that we've showed in the past from this cup and handle from 16 to 73. That cup and handle measures to a 132. So that's what we got to look at. But the key is this test of this trend line that it successfully rebounded off. And then we have to see, with respect to what happened in 2021, a similar pattern. That's what the bears would tell you is setting up, where we had a higher high. So from here we had a higher high and then a higher low, 28.9 to 33, and then 2 months. These are monthly charts. So 2 months or 2 candles of an upward kind of a climb, but that is basically what we call as a bearish flag pattern, and then a breakdown. So bears would effectively look at maybe this month and into January, some bit of a counter trend move and then a breakdown. And that breakdown happens below this key trend line that we've shown here, below 80,000. That could come and test this rising 50 period moving average. That this is a 50-month moving average. That's near 56,000. That's what happened back in the 2022 sell-off. So 2026, 4 years later, if it's that 4-year cycle, we could perhaps get that pullback towards the 56 is what the bears would look at. So it's got to be careful about. But till now, this bounce of this key trend line joining the previous peaks and then the low of April looks bullish, looks set up for some form of a counter trend rally at least. So for the next couple of months or so. So that's what we're looking at. To sum it up, we think that VIX testing its lows from September 14.33 exactly today is something of concern. In fact, it took that low now. Now it's at 14.26. It's below the 14.33. So now the next level is 14.12. So we got to see if it hits the 13 handle or not in the next few days, because the Santa rally is to continue. VIX perhaps continues to collapse. The put call ratio is setting in a pattern of higher highs, higher lows. That could indicate eventually a jump like we saw into April of this year. So that kind of a pattern of higher put call ratio indicates fear in the market, indicates market kind of having sell off from the peak levels. The investment manager exposure is over 100 now, which is also a complacency sign. Investment managers are actively invested in the market. And then QQQ's pattern is, however, very bullish with an inverse head and shoulder that measures at least 10, almost a little less than 10% higher to 678. We'll see if that pans out, and that could be helped with the NVDA's breaking out of its falling wedge pattern, which is a bullish pattern from the trend line. And today it's above 1.4%. The next level is 188. It'll test that, and from there we'll see if it can break it out higher. In that case, 169 to 188, you're talking about $19. At 19 to 188, you're talking about 207 or so, which is going to come back and test that previous highs from late October near 212, 210 is where that possibility is there. Silver, kind of a bearish rising wedge pattern. That breakdown below the tip of the wedge could bring it back all the way to test of 49 from where it broke higher. That's the 50-day moving average as well. So that's the expected pullback in silver towards 49. And Bitcoin near term looks like setting up for a counter trend rebound like we saw in the 22 drop, late 21 into 22, first part of 22, 2 months of counter trend rally. We could expect that to happen towards maybe 107, 108. And then from there, bears would look for it to break down, break below this trend line and go all the way to the test of the 50 period moving average at 56. But bulls would in particular look for this to continue the climb and set new highs. And that's what we got to see. If that momentum does come in, it could be bullish for the crypto holders. With that, good luck investing. We'll talk to you next week. Thank you.